Afternoon, everybody. Welcome to the February 11th, 2022 edition of News from the Front Lines of Business by DW Huff Consulting, where we help you know your numbers. Okay, here we are. We made it through another week. It's Friday, February 11th. I'll go ahead and start fun with numbers here. So, as you know, it's 16, or I guess the Roman numerals XVI. And that's the Nemesis Parade. So this is the 16th edition of the parade here in Chalmette. So we're excited about that. And it's going to be not tomorrow, but the following Saturday on the 19th. So we're excited to have some normalcy back here in St. Bernard, and looking forward to the parade. It rolls right in front of the office. So next Saturday will be a very non-productive day for us as far as work goes, but we'll hopefully have some fun. So anyway, this week, IRS update. So for the most part, actually this has changed since this morning. So most of the forms are now out of draft mode. So we had some issues during the week with some of the main forms are ready to go, but there were a handful of forms that were still in draft mode and was kind of causing some issues with the e-filing. But as of today, I would say the majority of what I've looked at is good to go. And there are just a couple of lingering forms out there that aren't going to be widely utilized by a lot of people. So we expect the e-file to be pretty close to normal at this point. So just continue with your documents, but everything should be normal. There should be no need to really hold off on anything based on form availability. So it's improved quite a bit. All right, so casualty losses. So this is a question that is now coming up. So we compare, the Hurricane Ida losses compared to other ones we've had, and this is something that's disappointing, I think, to a lot of clients. So I think a lot of times if you had property that was damaged by the hurricane, and maybe the insurance didn't cover it all, you think you have a loss, but the rules are kind of complicated, and I guess Hurricane Ida allows some deduction for casualty losses, but other casualties, so keep that in mind. There's two separate things going on here. So if you're reading up on it and you talk about a casualty loss in general, which would be something like somebody steals your car, or you just have a house fire, those type of casualties you get no break for. So that's kind of off the table for this filing year. But disasters that took place within a presidentially declared disaster area, such as Hurricane Ida, will allow you the possibility of some kind of deduction. So it's not a great deduction, unfortunately, because there are some limitations. For one, they look at your adjusted gross income, they multiply that by 10%, and they subtract it from whatever you lost, whatever your loss is. Now, whatever's left over gets utilized on the form. So there's a couple of little minor details there, but that's so that's the first hurdle you got to get over. And I think most cases, when you look at what was damaged, and assuming you had insurance and you had some kind of insurance, coverage that paid you off of some loss, in most cases, when you net those two things together, there's not much of a loss, even before you apply some of these other limitations. But usually the loss isn't as big as you think it is because of the insurance proceeds, so whatever's left over, goes into the calculation. So it's not a great write-up because of that. Because a lot of times you got these things happening that just wipe out the loss. So the casualty losses are not good to begin with, and I guess there's another limitation we need to think of too. So when you're looking at basis in the property, there's another way that the IRS makes this a very kind of a stingy kind of deduction, in that they look at your decrease in fair market value. So you got to know what the fair market value of the property. That factors into the potential calculation, and as well as that, so decrease in, or the basis in the property, your purchase price when you originally bought. So it's all kind of moving parts here, I guess, is what I'm getting at. And in general, I would not be expecting very much of a loss, because even after accounting for all these things we touched on very briefly here, there's all kind of things that take that dollar amount that you lost and subtract it, whether it be just limitations because of the basis in the property, or because you got some insurance proceeds. In fact, take all those things out of there, and we still got to get above, a high enough amount where we can exceed our standard deduction and be able to actually use the deduction in some type of form. So, married filing jointly, those people are sitting at around 25,000-ish of a standard deduction. A single person would be half of that. So after you do all these gyrations and calculations, what you're finding is that there's not very much that's available to be used. So it's a very stingy calculation, not very good. And there's no doubt in my mind that people do have losses, because if you look at the replacement cost. Let's say you had a roof blown off. The way the calculation goes for the loss is that they don't take into consideration what it takes to replace that thing. So they don't look at the cost to replace it and factor that into the loss. They look at what you paid for the roof originally. They look at the decrease in fair market. There's also other limitations there, and it might cost you. You might still be out of pocket by the time you replace that roof. You might still be out of pocket by a good bit of money, and it might be substantially more than your insurance company paid you. And the loss isn't very good on the tax side of things. So it's just bad all the way around. So don't be optimistic there that you're going to see a big tax benefit from these hurricane losses. So anyway, so that's what we've seen so far. But and just in comparing it to our other losses we've dealt with here, going back to the Katrina losses, is where most of us got a lot of more experience than we ever wanted with these things. And there was a situation where a person was filing a lot of returns here in St. Bernard. Big dollar refunds, $30,000, $40,000, $50,000, which was way higher than it should have been based on what you knew about the average value of a home at that time. And IRS saw those returns and ended up auditing a lot of them, and they got reduced down to what it should have been. So so in most cases, if you are looking at these numbers and you come up with a really big tax refund, I would say anything more than $10,000, stop. You probably did something wrong. Let somebody take a look at that, because these losses are very, 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 very limited, and you're not going to see huge tax refunds from casualty losses. It's just kind of the way those laws are written. But you can get a little break, so don't totally forego it, but just don't expect any miracles there. So it's another discussion we've had with some clients over the course of this week, dealing with rental properties. We talked about the the refi till you die and a way to kind of harvest the equity out of that. The reverse mortgage is, I guess, the equivalent to that on somebody who doesn't have a rental property. So it's just a regular place where you're living in. That's kind of the same policy. There's some other rules you got to worry about there with the minimum age and things like that. But it's a similar concept, I guess, to taking that equity out of the property and using it for everyday cash flow needs. So talk to us later if you have questions about that. But that was a discussion. So aside from that, it's a regular tax season. Now that the filing and the forms are getting finalized. But I thought for the week, go back to that Carpe Diem message there and seize the day, and looking back at the obituaries this week and a couple other people we know that passed away, definitely can't stress that enough. So that's my takeaway. So enjoy your weekend. Weather's very, very nice here. I think it's going to be a perfect day to be outside catching some parades or doing whatever you do. So be grateful, be humble, and we'll see you next week.